Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Regulatory uncertainty is colliding with macroeconomic rigidity, creating a volatile landscape for global markets. The CFTC and SEC have jointly opened a 60-day comment period starting June 18 to redefine swaps. This move directly impacts crypto perpetual futures and prediction market oversight. Traders must now navigate a shifting regulatory framework that could fundamentally alter how digital assets are classified and traded. Meanwhile, the industrial base in the United Kingdom faces an existential threat. Industrial electricity prices there now exceed the International Energy Agency median by 90%. This cost disparity threatens the viability of 130,000 firms. Both the Make UK Trade Group and the TUC are warning of imminent collapse without immediate government relief. Deindustrialization is no longer a risk, it is a current trajectory. On the macro front, inflation remains sticky. April core PCE hit 3.3%, marking the highest level since November 2023. Fed Chair Kevin Warsh has signaled patient hawkishness. This stance is pushing rate hike expectations into 2026. Investors are recalibrating portfolios for a higher-for-longer environment. The path to disinflation is steeper than anticipated. In related news, leverage levels are reaching dangerous extremes. JPMorgan estimates $165 billion in equity sales due to quarter-end rebalancing. Gross hedge fund leverage has hit 294%. This raises significant volatility risks, particularly in tech and AI sectors. The market is fragile. Any shock could trigger a cascade of forced selling. Looking ahead to earnings, Fervo Energy and Outdoor Holding report Monday. Analyze the data points and technicals for S&P 500 and Nasdaq context. These results will provide clues on energy demand and consumer spending resilience. Although there are no major economic calendar releases in the next 36 hours, the absence of data amplifies the weight of these structural stories. Markets are pricing in regulatory shifts and inflation persistence simultaneously. The interplay between crypto regulation, UK industrial decay, and US monetary policy creates a complex web of risk. Investors should monitor the CFTC-SEC comment period closely. Regulatory clarity could unlock liquidity in digital assets. Conversely, ambiguity may suppress valuations. The UK situation requires political intervention. Without it, supply chain disruptions will worsen. The Fed's hawkish signal demands caution. Rate cuts are further away than the market hopes. JPMorgan's warning about $165 billion in sell-offs is critical. Leverage at 294% leaves little room for error. Volatility will likely spike during quarter-end rebalancing. Tech and AI stocks are most exposed. Monitor volume and order flow for signs of distribution. Fervo Energy and Outdoor Holding earnings will offer micro-level insights. Look for margin compression in energy. Watch for consumer weakness in retail. These micro-trends reflect the broader macro pressures. The convergence of regulatory, industrial, and monetary pressures defines the current market. Stay agile. Risk management is paramount. The era of easy money is over. Structural headwinds are intensifying. That's your market briefing. Follow Rumour with AI for daily market intelligence.